when you look at the adoption of technology, these institutions have adopted it pretty aggressively. But very few of them heavily utilize technology to market their products and services, and that's because of compliance. So without further ado, I'm going to introduce this great panel that is led by Rob Koyfman of Koyfman to talk about digital marketing and compliance in financial services. It'll have great speakers that you'll be introduced to, and I think you'll learn quite a bit about why compliance is so relevant and why it's the end-all be-all for financial services. So if you don't mind, please welcome Rob Koyfman, Prudence Plummer, Brian Hourihan, and Karl Kilb.
Analytical tools for investors. So in a nutshell, we're a mini Bloomberg or a souped-up Yahoo Finance. But we want to become more than that. We want to become a Google Docs for investors. So that's my company in a nutshell. Compliance is obviously very important for fintech and for the sector as a whole. I'm going to start off with opening up to the panel to introduce themselves and tell you a little bit about what they do. Prudence, do you want to get started?
Thank you. Getting us started up. So my name is Prudence Plummer. I am a vice president at American Express, and I support the consumer products services. So basically all our consumer credit cards and loans. That's under my purview. I've been with the company heading of 17 years, and in banking, I would say over 25 years. Don't start calculating the age.
Thank you.
My name is Brian. I'm a lawyer by trade. My background is with all types of large firms working on asset management, capital markets type of matters, as well as top-tier asset managers. I was at Oppenheimer Funds for about 10 years, as well as other firms in Boston. I'm now on my own. I've been doing a lot of work with fintech firms and other technology-type companies and helping them navigate the regulatory labyrinth that is out there, which we'll talk a little bit about today.
Great. Hi, good morning, everybody. My name is Karl Kilb. I'm the CEO of Valoro Global, which is based right here. You walk by us on the way in. We're a fintech company that is already licensing our technology around the world for authentication of all kinds of transactions and all forms of mobile payments. And before Valoro, I was at Bloomberg for 22 years. I was the general counsel and head of compliance. I started the legal and compliance departments at Bloomberg in the early 90s when the company was very small. And I was also a founder of Bloomberg Tradebook, which was one of the early electronic trading and order routing companies. We had launched it back in 1996. And interesting, you mentioned both Bloomberg and Yahoo Finance. I'll also mention my wife is lead anchor at Yahoo Finance. So I kind of have the Bloomberg and Yahoo Finance perspective.
For all yours in one basket.
Little connectivity.
Exactly.
Great, thank you so much. So I'll start out with a broad question, given that this panel is on compliance. Can you guys talk about the, you mentioned you come from certain verticals, consumer, asset management, and maybe services, but what are the verticals that that we should think about in terms of that all of us here in this room are servicing and dealing with, and what are the bodies that are governing those verticals when it relates to compliance in the U.S.?
Sure, can I?
Sure.
What do we think about it from a big picture perspective? So as we talk today, and we're welcoming a lot of questions, we really want to think about, as we talk about different products and as we look at products and entities, what are they, right? So with my clients, the first question I always ask is, what are you? Typically people tell me they're a technology company. I say, that's great, I get that, right? It's pretty straightforward. But what are you really? Right? You really got to boil it down and figure out, are you somehow involved with financial services? If you are they securities, commodities, futures? Then you need to think as well, are you somehow involved with money movement? So does that mean you're more on the banking side? Do you actually issue something that has a guarantee or has some kind of future payment constructed? Does that mean you're the insurance company? Or have you set up a really cool app or something else in connection with an electronic wallet like we heard about? Are you a money transfer? Are you involved with consumer lending? And when you get to that stage of the analysis, then you can really start having a deeper discussion. That's something we're going to talk a little bit about today when we think about that. What are some of the rules regarding marketing that apply across those types of entities? And then from a regulatory perspective, you've got the SEC for securities, you've got CFTC and the National Futures commodities. You've got a litany of banking regulators. Remember, banking law in the United States is divided between the feds and the states, right? You think Federal Reserve, often control the currency under the Department of Treasury. And then you got the state banking regulators, as well as the national, the NCUA for credit unions. And then beyond that, then you have, each state has its own state insurance regulator. Obviously, we'll see what's going to happen with the new administration. That may change. And then, what do I leave out? Then you also need to think most importantly, consumer finance and consumer type activities. There you have the FTC, and now we have the Consumer Financial Protection Bureau, who was very active in 2016. And we'll see what's going to happen with them going forward. One thing that has most recently happened has been a challenge to their organizational structure. You may know that the way they operate is they're supposed to be protecting fintech customers. It's really what's supposed to be happening. From any type of information that is erroneous or false or otherwise, or other types of disruptive or inappropriate type of action. But what's happened is they've been challenged because they only have one director, and that person makes all decisions with respect to enforcement as well as promulgation of rules. Now, that doesn't work with any other regulator that I talked about. Each one of them has to follow what's called the APA, Administrative Procedures Act, where there has to be notice and comment. So, long story short on that, it's probably going to end up at the Supreme Court.
There's several banks that challenged them.
Yes.
Which I think this is the first time since they've been instituted that they've been challenged. So that's interesting.
Got it. And just, you mentioned obviously the new administration. If you can maybe, if anyone has any views on, we obviously had a lot of regulations come into the capital markets, especially in the consumer front, the past several years with the previous administration, and the new administration is looks like they're going to roll some of those back. So how should companies think about as they're planning for the next 2 years about these regulations?
Well, I think you always have to understand what you are, what you need to require, what you're required to deal with at the moment. I mean, you can always forecast where you think the regulations may go. And in fact, if you're forecasting where the regulations may go, and where they may go is even rolling back a little bit from where they are now, it's only going to be that much easier to comply. But the reality is you have to know, what are my duties in the here and now? What do I have to make sure I have to do as an entity? And also, frankly, maybe for a lot of people in the room, you look at compliance as not only a requirement, but also a business opportunity. Because if you understand what type of an entity you are and what your regulatory requirements are, that's one thing. But if you're servicing customers and you can understand what their regulatory requirements are, or may soon be in the near future, which is something that I did for decades at Bloomberg, what do we need to do now? What do we anticipate the rules and regulations are going to be? How do we build products and services to ensure that when people license what we have, they're going to be in compliance going forward? That's really crucial. But I certainly wouldn't want to, you don't want to run your business by forecasting that anything's going to be any easier to deal with, right? You have to think of the here and now, right, and be ready for whatever might come down.
Yeah, and I would just want to echo what Carl says. So there is a lot of speculation, and I think from the banking front and for financial services, the way we're looking at it is the here and the now, but we're getting ready just in the event there is a change. And also from what we're hearing from our industry folks like the American Bankers Association, it's like, well, don't hang your hat there because it's really going to be onerous to strip back all those requirements that were put in place. So it is going to take some time. So you really have to just deal with it here and now.
I think that's true. But to build on that as well, you have seen some changes. So the Department of Labor came up with the fiduciary rules. Anyone know what that is? It's amazing. The reason why I say it's amazing to me is because it affects all of you. And it affects all of your family members with respect to how financial services firms can interact with you in connection with your retirement savings accounts, something very basic. And that really is very startling. But what it does, well, actually, it basically limits the types of fees that broker-dealers and other types of intermediaries can collect. And when it's really moved and shifted them to what's called a fiduciary standard to make it easier for people to sue them, in essence, is what the industry would argue. There's one change that's going to take place. Also, I think you're going to see a lot of change, too, from the Securities Exchange Commission. The current acting commissioner, his name is Pilar. The new commissioner that's coming in, the chair, his name is Clayton. He's very focused on regulatory change. Hourihan has already actually come out and asked that 2 rules that were already adopted, basically, they go back and look at the comments that were received to talk a little about the APA. So we'll see what's going to happen there. He's also come out and talked a little bit about rolling back and decreasing the limits for so-called accredited investors. Everyone knows what those are, right? If you want to buy into a hedge fund or another type of non-retail product, you need to meet certain minimum standards. So he's talking about really democratizing, if you will, the private fund space. So Raz did have a wonderful presentation here on the board, and you saw all the different types of work that folks have been doing in the asset management and other areas. So that's another area where I think you're going to see a lot of expansion. Beyond that as well, we talked about consumer financial protection. Well, I think you're going to see a lot of change there because what their activities over the past year have been focused on fintech, and that's been very problematic. We may also then see some change on the state level.
And so that's a great segue into fintech as a topic. You obviously have a lot of experience in your careers with traditional firms, and now everyone's dealing with fintech either directly in their new jobs or in some tangential form. So can you elaborate on the regulations as they relate to fintech and how fintech companies market?
Sure. So big picture, fintech really is just a word for using financial technology with different types of financial services, as we all know. So what's interesting for me, having been, if you will, with most of my professional life in the traditional, is really then looking at how those rules that apply in the traditional sense apply over in the fintech space. It's very difficult for fintech firms to comply with the regulatory suite that's out there because most fintech firms, as you can tell by my earlier comments, you really got to figure out what they are. In many cases, what I found with the clients I have, they're touching a number of different areas. I had a client the other day where I was just talking with them, trying to better understand what they were, and I was able to determine they probably issued a security. They probably were involved with holding on to that security. They had a platform where they sold it, and they had a lot of different people who were involved. So me being a securities lawyer, I said, well, that's kind of interesting. I used to teach law school too, not surprisingly. And I said, well, I could have written a whole law school question on this because once you have securities, you've got this 33 Act, which deals with selling securities or creating a security. You've got 34 Act sales with broker dealers. And so that all plays into how they're going to market it. So when they go out and market themselves, if they haven't truly established who they are, they may be in the wrong realm from a marketing perspective. So use my example where this firm is selling a security. That means that they're a 34 Act entity. They're probably a broker-dealer. If they're a broker-dealer, they need to worry about FINRA. One thing we'll talk a little bit about later is FINRA and how FINRA determines the different rules and requirements, right? So number one, people need to be registered, right? Number two, the entity needs to be registered even prior to those persons. Three, whatever you're doing then in social media needs to be analyzed as to whether it's static type of advertising, in which case pre-approval is required by these persons who should have been registered. If it's interactive, let's say we set up a blog with discussions or we can post and go back and forth with our ideas, that does not need to be pre-approved, but it still is within the regulatory framework. And then beyond that, we're talking about consumer financing. You need to figure out again which rules apply to you, because if you're moving money, there's literally an alphabet soup, I kid you not. You've got regulations B, D, E, E, right, Z that are out there, that all will apply to you. And then you also have the FTC rules, and then of course you have to see it be bigger.
I think one of the, just jumping in, I think one of the things, as Brian said, you have to look at what entity are you supporting? So are you a bank? Are you in the investment realm? Are you in insurance? And then you have to think about what is your product offering, right? So are you selling investments as well as selling insurance? So if you are selling investments, then the SEC comes in, you have FINRA rules that kick in. And then also if you're selling insurance, then you do have the National Association of Insurance Commissioners, and then you have state regulations for insurance. So each state has their own insurance laws that you would have to comply with. And then if you think that, if you're a bank doing deposits, right, or making loans, then you have the deposit regulations that come into play. And then you have like stuff like Reg-O, and then if you're doing your consumer lending, as Ryan touched on, you have your Reg B as it relates to fair lending, you have Reg Z in terms of what you can sell as it relates to loan and credit cards. So that's the way I view it in my mind in terms of peeling back the onion to determine what you comply with and who your governing regulator is.
And I think that's the key to this. It goes back to what we initially started with. You got to figure out who you are and what you are, and again, what you sell from a product perspective, and who are your customers. Because that is another point. So think about FINRA, right? Different rules for institutional customers, like banks, other types of institutional investors, as compared to retail investors.
And part of that process, I'll just jump in for a second, is going to be sitting down with somebody who is a securities lawyer, who understands the climate for regulatory compliance in your industry, and will ask you some questions that you may not have thought of yourself, just to make sure that you have the right universe of answers to figure out, what am I classified as, even if it wasn't necessarily part of your business model, because there's something you're doing that may actually hit on a rule or regulation you hadn't thought of. Suddenly you're in that category. And then if you're not complying with what's expected of an entity in that category, you're going to find yourself in a lot of trouble. And just quickly back in the mid-90s when we were pioneering electronic trading at Bloomberg, frankly the best way to figure out what needed to happen was to deal with the regulators directly. And we actually had a regular dialogue with the Securities and Exchange Commission and ultimately got what are referred to as no action letters, which meant it was not a clear rule or regulation that allowed us to do what we wanted to do, but the regulators appreciated what we were doing and gave us a letter of comfort to say they would take no action against us. And that is something that at least shows you raised your hand, you went to the regulator and said, here's what we want to do, here's why we think it makes sense, how do you classify us, and can we get some comfort that you're not going to come after us?
And 2 points on that. To go back to the idea of connecting with your lawyers and your consultants and compliance people. You need to do that initially, one of your earlier questions, and it should be an ongoing dialogue. So if someone comes up with a really cool change, or you want to run that by your lawyers before you do it. I've had instances in my prior firm where people came up with very interesting changes, which was great. Once I looked at them, I realized, wow, you just created Pandora's box. And so then we had to basically undo the change and really fix some of those issues. But that's one thing to think about. Number two, if you do want to go in for a so-called exemptive relief, no action letter, or you can also get so-called exemptions from the SEC under the 34 Act, as well as under the Investment Company Act, Investment Advisors Act, you can't be doing what's prohibited in order to get that relief. So you want to think about that. So an uh-oh moment puts you in a position where you may need to stop your business to try to get the relief.
So for people in this audience, if we're thinking about compliance, who do we ask? How should we think about approaching someone either internally or externally for help to guide us through this process? What are the types of people or the types of attorneys or lawyers that we should do?
Typically, securities lawyers, ideally securities lawyers that have a direct tie into the regulators. And very often you might be dealing with securities lawyers that used to be with these regulatory bodies and have now left these regulatory bodies, gone into a firm, and taken that expertise with them.
I'm one of those people. So one thing I left out of my bio is I used to work for the SEC. And so I worked on all the exemptive app and all the investment company, investment advisor type things, as well as a lot of companies that became investment companies that are a whole other point that we can talk about. That actually maybe another panel on another day. But you want to start early, you want to get the right counsel. So one other point to think about, those of you who may have tech companies out there already, you may hire counsel who's going to bring you, I call it the promised land, because you want a lot of the clients that I've been working with, because someone's going to bring them to IPO. And I say, that's great. Because then we really look at who you are from a regulatory perspective. And then I laugh, because then it becomes a whole dialogue about what they are. And, so my point there is think about who you're hiring. Just because they tell you they can get you to the private placement land, you're going to get an IPO, or you're going to go public with an IPO, make sure they really know and they understand your business, and they're able to figure out, again, all the different touch points that may apply to you.
Prudence, I'd love to ask you, obviously Amex, a large player in the financial services industry, past couple of years, big shift towards digital, away from other mediums. That slide that Raz showed suggests that's going to continue. What do you see internally that you guys have been doing in terms of thinking about compliance and marketing as the shift has happened over time?
So I think, and I have my digital expert here with me, I think for us, one of the things was really trying to assess the regulatory landscape as it relates to digital. What are consumers, as Raz mentioned, consumers are asking for this, and how do our regulators require us to comply? And so for a long time, there was this weight on, guidelines around social media. Now there's this push where consumers are really asking for servicing online through chat, or they want to acquire products through chat. And so we have to really assess and also work with our council to say what can be done, because there are certain, if you're asking for a product, there are certain regulations that says you can't get that product unless we provide you the disclosures in writing. And what does that mean? If it has to be provided in writing, now that we enter the digital space, then you have to consent to agree to those terms electronically. And if you're in a chat, then how do we comply with those requirements? And so I think that's where the partnership comes in with fintech companies in terms of how do we get there, and then how do we create that compliance to ensure that we are providing or meeting the needs of consumers, but also ensure that we're meeting the regulatory requirements, which are fairly new and very challenging. So it is still, I would say, a growing space, right?
Constantly changing.
Yeah.
Okay. I'm going to pause there and open it up to any questions that the audience has. Yes.
So having worked with both the marketing people and the compliance people, and seeing how compliance is so complex, how can you help the marketing people understand the implications of compliance when they're trying to create a new product or launch a new product without stomping on their creativity?
Yeah, I'd love to jump in on that one. I mean, there's really no substitute for the compliance officer understanding his or her industry and exactly what's driving the business side of the house. But at the end of the day, there has to be this understanding on the business side that there is no business without compliance. You simply cannot move forward with any business in any industry if you're out of compliance with the fundamental rules and regulations governing you. And if they understand from the outset that basic necessity, and they also understand the gravity of the penalties for not complying, I can tell you, as the first person who was from a legal compliance orientation within Bloomberg in the early 90s, that was the way I handled it from day one, is that it has to be that essential, actually getting in front of business people and making sure they understand that. Whether it's marketing material, whether it is how you're framing up the electronic trading and order routing business, whether it or the walls separating news from sales, from R&D, et cetera. These things are just so fundamentally essential, have to be drilled into people at the outset. They have to warmly adopt them as absolute necessities and know that the fear of failure to comply is so great that they have no choice but to do it.
I'm trying to say, the
Sure.
fear. So marketing tends to fear or think that there's an adversarial relationship.
Well, can I just
It doesn't have to be adversarial.
For me, it's always been a partnership. So my approach has always been I would set up wholesale complaining training programs throughout the firm, as well as
Complaining from
a little slip. They would not complain about the actual presentation if they didn't like what they were told or actually were learning. But seriously, set up training programs so that people really understand the business, all the rules that apply. And then individualized training as well for each of the compliance people and each of the marketing people. So folks in the digital era, be very focused on what they can do and what they can't do. Be very clear about the reporting structure. Be very clear that, you know what, we have to have a relationship, a partnership. So if you have a question, call me any time of the day or night before you hit the send button. So we don't have a situation where we got an uh-oh moment on our hands where...
Yeah. And just one thing I would want to say is sometimes what I do, I put the onus back on marketing or the business, right? You have to understand the organization that you're in and what is the risk tolerance for that organization. One of the things you want to think about if you're dealing with a bank or another financial institution is are you currently under a consent order or some matters that require attention? If you are, the review process is going to be so stringent that everything you have a creative idea, thought, you want to change a word, you may just want to change from a guarantee to something else. That has to be approved because that's exactly what is spelled out by the regulator in that action. And maybe if there's no enforcement, enforcement action against the institution, there may be some variability. You may be provided with some guardrails in which you can play in. You can change this offer, but just this far, or you can change an image in your collateral or something like that. But anything beyond that then has to come into compliance. Because the one thing you don't want is your regulators coming in or a complaint from a consumer because the marketing was misleading or confusing. I mean, complaints is a hot item now. So, I think, the way I tee it up to the business is understand the space, the playground that we're in, and we'll partner together to get this done.
Yes.
I have a question, Peggy McGill, CPG Partners, about blockchain, which apparently this is again going to be clear with blockchain, but from a regulatory and compliance standpoint, it seems to me that it's still not well thought out.
Well, I would.
People are thinking about it, but it's unclear how it's going to be regulated. At least to me as a marketer.
Well, one way to think about it. So again, everything's got a place.
And I'm assuming everybody knows blockchain.
Yeah, so blockchain is basically the digital technology that can be used to help track. We'll talk about a lot of different types of transactions. So I can see it used for a lot of different things. A lot of trading type activities that are taking place, particularly in the OTC market. Right now you see DTCC, where everyone's going to DTCC. It's the organization that actually keeps track of all the securities and who owns what. They actually want to adopt it. You like to end up, whoever starts using it, it could be a transfer agent system, so it could be registered there. It could be used by broker dealers, it could be part of their platform. So I think there's great promise. You can see that's why so many people are so focused on it.
So you think there is good regulation of it today?
Well, it's not necessarily regulated today.
Okay.
The question, right, becomes, again, however, something like that, how do you use it, right? So, good example, I had one of my clients the other day. He told me he was going to be trying to keep records. I said, that's great. You're not registered as a broker dealer, so you're probably going to be a transfer agent. But same kind of concept, right? That's what you got to think about. How are you using it, right? So if we went out and set up our own blockchain, we said we're going to record all your securities transactions, we're going to be a transfer agent.
Well, even what you're talking about there is an after the fact,
right.
Recording what's already occurred. What we're doing at Boloro, we're ensuring that the transaction is authentic before it's processed.
Because I know that right now with Bitcoin, you hear the stories, which is just one application of money laundering from not so principled people. And I'm just wondering, we have this really regulated system on one front, and then we sort of have this Wild West. Like, how is that?
Well, the first thing you need to know is who's on each end of the transaction.
Okay.
Which is something that we can ensure with Boloro. We're basically, to take a step back for a second, we're tying a mobile phone number, something that's unique to you, giving you an economic identity. Individualized to your transactions. So before, whether it's a credit card transaction, a mobile banking transaction, it could be electronic trading order routing, it could be anything. Before that transaction can be processed, a flash message is sent to your mobile phone. You enter a PIN that's in your head. Take an ATM-like experience right on your phone. Okay. When you enter that PIN that's in your head into the phone that's in your hand and hit send, only then is that transaction validated. Then once the transaction is processed, it can be recorded in a blockchain or any other place, for that matter. But the key, the first thing, is making sure that you have valid counterparties. To really eliminate fraud and to really ensure compliance, you need to know who's on each end of any transaction. We can ensure that. So that's what Boloro's mission is, in effect. So we see ourselves kind of at the center of this compliance effort going forward, because what we're talking about here is increasingly everything happening online and without human intervention. How do you make sure you're dealing with the right person? You can ensure it through their mobile phone number and then entering a PIN that only they know.
Raz?
So, Karl, you reported directly to Mike Bloomberg, and you sat probably, 20 feet away from him?
He hired me.
He
interviewed me in the summer of '92, and I sat within about 20 feet until he took a new job downtown.
Did you ever have to say no to him as an entrepreneur? Like he had a marketing initiative, and from a compliance point of view, did you have to kind of say no to the entrepreneur?
You know, Mike is one of the great listeners that you're ever going to meet, and hopefully people even saw that during his time as mayor, where he really takes it all in and then makes a really well-reasoned decision. So the great thing about how that company grew so quickly is that we had a really passionate group of people sitting in a very open environment that could have a very collaborative discussion about the best way to go forward. And then you could get an instantaneous decision, and then it could be rolled out immediately.
So it's much more of a creative process rather than...
much more of a creative process, because I think, even to go back to some of the questions in the front, the answer doesn't necessarily have to be no. The answer...
Convergence of marketing and compliance standpoint, question for the panel would be, data is becoming more available on consumers. How do you see this going forward in a situation where once the identity of a consumer and enough data has been gathered, you can basically develop a profile of people's interests, what are they likely to do, which way they vote, and what their preferences will be, and introducing compliance and regulatory regime after the fact is going to be of no use at all. You have people from payment networks and others who work in the financial services industry. How do you see this evolving?
Right now you're seeing it evolve with some of the commentary on the banking side about how you're treating customers or prospective customers, because if you're collecting data online and then you use certain criteria to select or to sort within that data, you may have issues under the banking laws, because remember there's fair credit rules, which means everyone has access. And so that's one area. As far as on the securities or commodities or derivatives side, that's not something that has arisen, because there's more about what is the transaction that takes place. I mean, that is a good way, obviously, for lead generation, which happens all the time. But it remains to be seen. Then you have the consumer side of things as well, where that's where you really need to take a deep and a very long look at what you are and how you're interacting.
So just to jump in, one of the things, if you are collecting all the data online of consumers and you're building your own, what I call bank of information, the first thing you have to let consumers know that you're collecting it, and especially if it's non-public information about them, so name, address, and certain other attributes, right? You have to disclose this to them that you're collecting the information. Also, you have to let them know how you're going to use it. Are you going to use it to market to them in the future, goods and possibly services if they are your existing customers? And then you also have to give them the option to opt out of that marketing. You also have to let them know, are you going to share that with non-affiliated third parties or affiliates if you have any, right? And then give them the option again, what they want, how they want you to use that information. So really, consumers are the drivers of the data that you're collecting about them. And then the other thing that kicks in, which is huge, is the data protections, right? How are you protecting that data? How are you protecting that information you collect? And if you're sharing it, it has to be in a secure environment. I mean, you have to do some form of encryption. So again, for consumers, it gets very technical, and it's something that you have to comply with.
Yeah, big picture on that is all the privacy rules, and again, there's any of those beyond what we talked about. But then on the cyber side, we're in New York, you're probably aware, or may not be aware, New York is now promulgated a very comprehensive and it will be a very far-reaching cybersecurity law. It likely will be the blueprint for laws in other jurisdictions. It certainly affects and impacts providers of services and non-U.S. outside of the jurisdiction of New York, because what it requires, in addition to all types of controls and authentications and assessments and reports, is it requires you to actually then look as well as your service providers to see what they're doing and make sure they have the right controls in place. So more to come on that, but that's a whole other angle that we need to think about.
And if I can follow up with that, in terms of different jurisdictions internationally, whether it's UK, EU, US, who's leading the charge in terms of being the most stringent, and do you see those evening out eventually?
Let me take another one, because I'm a free market kind of guy. So looked at the UK, looked at Singapore, looked at Australia, Ireland as well is really getting on the bandwagon. It's all about having lessening, if you will, the burden on fintech. So what a lot of these countries are doing, one, they're having so-called regulatory sandboxes, and what that means is that this is we came up with a couple of really good ideas, such as yours. We would allow the company to operate. We work with them from a regulatory perspective, to better understand the product. We would do a no action letter process, or also through maybe a lessening of enforcement requirements, allow that person or that product to operate without the threat of having enforcement action being shut down. Also, what you're seeing in those jurisdictions was actually a lot of partnerships. So I mentioned those countries. A couple of those, three of those actually have partnerships with each other. What they're really trying to be is the fintech capital of the world, each one. Through those partnerships, we're trying to have the firms go back and forth. UK, Singapore, UK, Australia. Here in the US, that fortunately, hopefully is on the horizon. There are some impediments. We talked about the different regulators. The SEC, the current acting chair, is all for regulatory sandboxes. The new CFTC chair, I think he will be as well. With respect to the CFTC, the CF Consumer Financial Protection Board, stuff to hard to say. They talk about it, but theirs is a little unusual because if you already have a product, you can't get into their sandbox.
Can I comment on this? The average data cowboy entrepreneur is not, sometimes is not aware of all these regs when they're scraping information of consumers online, and they're not sending out, these opt-out to customers because, frankly, they don't care. So I think a lot of these compliance rules are built for big companies, and they're the ones that are fine. But when does it trickle down to the people who are actually building the tools with the dashboards and,
Well, it is already. That's really, if you think about my thesis, that is the thesis, right? What you have is you've got an existing set of rules and regulations that really were set up for your more established type companies. When you're a startup, you're a fintech firm, you're operating in a very entrepreneurial space. You're trying to move forward with a lot of speed, right? Move fast and break a lot of things is the mantra. But when you do that with risk. And that's why the key is you got to have the right people. You've got to understand people who really know the laws, who look at your product, and know what your business is, and then apply it. If you don't, what's going to happen? And this is really, I'll leave it with this. If you get started with a company, you probably want to monetize it, right? We all want to sell it, we all want to retire someone. But guess what? It ain't happening. What happens is you set up a really cool app, and when I'm on the other side of the table and I've got my purchase and sale agreement, I start asking you questions. Boy, you look like an investment company. Are you? And I do the analysis and I think you are. Well, you know what that is? If I sign the contract and I think it's a bad term, I can rip that contract up and get my money back because it's void. Otherwise, if you're not complying with the different regulations, you're going to have a whole series of reps and warranties and covenants in that document. They're going to say that you owe me money if you are. So it's very important to know who you are, what you are, and how you comply.
And in the back behind the column.
Sure. I mean, I guess I would sort of ask the flip side of that question, which is, I think if you compare, real innovation, financial technology, right, in comparison to, let's say, the consumer internet, I think there's no doubt most of us will look at the present times and say, stateside, courtesy of the Facebooks, the Googles, the Ubers, for better or for worse, the US is the place to be, right? Financial technology, not so much. China, the UK, Eastern Africa, other developing economies are sort of taking the mantle on that. So what, since I think a lot of you have a lot of compliance background, what role do you think, and I think you touched on it in terms of the sandboxes, but in addition to that, but what role do you think so that the US Bay can play the role of fintech innovation, in a lot of ways catch up in a lot of spaces?
Yeah, but if I could jump in for a second on that one. I still think a lot of the fintech innovation is happening in the US. It's just being initially deployed outside the U.S. because a lot of the markets that are the first ones to say we want to replace cash are the places that make the most sense. So, you know, Valoro, for example, we're a Delaware corporation based right here in New York City, right in this building, but our initial deployments are all over Africa, the Middle East, and India. Because those are the first markets to say, we want to replace cash. We want everybody to have a mobile wallet. And we're a technology that can be deployed on any mobile phone, anywhere in the world, regardless of who manufactured the phone. It doesn't matter, you know, because we're coming through this separate channel, you know, typically referred to as a USSD or an SS7 layer of the phone. So we're using the same channel as an Amber Alert message in the US, for example, these flash messages. So we're not touching the internet at all. And the internet is where all the hacking, sniffing, snooping, and disasters are occurring, right? So if your transaction's on the internet, we put the authentication on this separate secure channel. But these are all concepts that are being much more readily accepted outside the US. So we're all over those markets. But at some point, and we think it's happening soon, the banks in the US are saying to themselves, we don't want to be victims of fraud. Who wants to be a victim of credit card fraud? Who wouldn't rather take a split second to authenticate a transaction on their phone rather than have their credit card used yet again for a series of fraud, and then you have to go get yet another credit card, right? And deal with the chargebacks, the disputes, and everything else. Who needs it, right? So the point is coming. There are markets around the world that are starting to already mandate authentication. South Africa is one, for example. It's mandating that debits from checking accounts be authenticated. That is such a great idea that at some point others will follow, and ultimately, often the U.S. is a little late to adopt some of the new technology. It may be out front with regulation, but it's often a little later with the technology. But at this point, we think in the fintech space, it's about ready to swing back to this part of the world.
Did we answer your question?
Yeah, I guess, you know, fair enough. I mean, I think if you think about, like, you know, movement like Uber, right? I mean, I think, and not just specifically talking about Uber per se, but, you know, the entire ride-sharing space that came to be. It wasn't, of course, suffice it to say, it wasn't the happiest ally of regulators and governments at the, you know, at the national, at the state and the city levels in this country. But I think one of the reasons why Uber has become a force to reckon with is they kind of innovated first, asked for forgiveness later, and it seemed to have worked out just fine.
If I can, just in 5 seconds, I'll say you might be able to do that in the taxi world. Don't try it in the securities financial services world. Okay?
There is no
I'm going to jump on that
forgiveness.
one as well, because my point about monetizing your business, you don't even have to worry about monetizing your business, because you won't have a business. Because remember, you'll have regulators coming after you, and you'll have private litigants. So yeah, in the financial services space, if you don't comply, there are consequences. You know, your point with Uber, granted with taxis, it's a big difference. Remember, there you had more industries, other kind of constituencies kind of pushing against. Here you've got, you know, just think, you're in the middle, and there's people around you, completely around you.
Yeah, if I can, in the fintech space, you're not allowed to take people for a ride.
That's hard to make a comeback.
I had to put it out there. What's a panel without at least one laughing one?
That's a great.
Unless you're talking about, you know, Wells Fargo opening up
Didn't seem that difficult to do either, didn't it?
Pardon me?
It didn't really seem that difficult for Wells Fargo to pull that off with that many people for that long. I mean, really.
But
They leverage AI technology, probably.
Wow.
maybe that's the point, right? It's coming back to haunt them after so long.
Yeah.
Yeah, it is. But remember, that's not done. Remember, there's a lot more. What we haven't seen, right, are all where the class actions are going to end up. I mean, it's just the tip of the iceberg. So if we have the same penalty years from now, we can go back to that discussion.
And think about the financial impact to them for the customers that they've lost. I mean, you did all these things to make the money, but you lost it in the fines that you received from the regulators, and then the customers got walked out the door. It's just not worth it. Yeah.
And take one last one back there.
Oh, I worked at American Express years ago and Dean Witter, and we're always trying to figure out how to cross-sell products. And it seems like we had the big step backwards, with regulation a few years ago. Is there any hope on marketing insurance, let's say, to a group, or trying to market retirement planning to a group, bank customers, something, where you've got a big set of customers? Any hope in that area, you see?
Karen Ferguson Act, which is a current competitive with respect to insurance.
Yeah.
We've heard with the ACA, potential provision and/or removal, repeal, that may actually change, right? Because remember, the way it works, it's all state law, so that's your #1 impediment right now. And most people actually know about these state insurance commissioners, and they have a lot of pull. Going back to your Uber comment, right? So you've got a constituency pushing back. Remember, you think about it from the state perspective, it's all economic, right? States make a lot of money off insurance because of what they can charge from a fee perspective. So, to answer your question, that's one area where I think there's going to be a lot of horse trading, because the states are in the red, right? And if they're going to lose another source of revenue from a practical perspective, that's got to be made up somewhere else.
So if I can wrap up here and summarize, basically a lot of complexities in compliance. You mentioned a lot of alphabet, a lot of letters in terms of regulation. So whoever's dealing with digital marketing needs to figure out, one, what type of firm they are, two, who is regulating them, and seek counsel before you ask for forgiveness and before you make a mistake.
In an ongoing relationship with your counsel and compliance.
In an ongoing relationship, and take Lyft instead of Uber. Can I please have a round of applause for our panel?